I still remember the exact night I found out my trading mentor had passed away. It wasn't dramatic, no phone call in the middle of the night, no sudden shock, just a short message in a private chat group, posted quietly, almost awkwardly, like the person didn't know how to say it out loud. He's gone. That was it. No explanation, no long tribute, just two words that felt heavier than any market crash I had ever lived through. For a long time, I just stared at the screen, not because I didn't understand the words, but because my mind refused to connect them to the man I knew. In my head, he was always there, sitting in front of his charts, calm, unimpressed by noise, speaking slowly, as if the market itself had taught him patience the hard way. He was the first person who ever told me something that sounded almost offensive at the time. You don't lose money because the market is against you. You lose because you don't know who you are yet. Back then, I didn't understand what he meant. I thought trading was about setups, entries, indicators, strategies. I was young, hungry, and convinced that if I just learned one more technique, one more secret, I would finally be on the right side of the market. He never tried to impress me, never sold me dreams, never promised consistency. In fact, the more questions I asked, the quieter he became. And that silence used to frustrate me, until years later I realized that silence was the lesson. When I heard he was gone, what hit me wasn't sadness at first, it was regret. Regret for all the conversations I rushed through. Regret for the moments I wanted quick answers instead of sitting with uncertainty. Regret for not understanding that some lessons only reveal themselves when the teacher is no longer there to explain them. I met him during one of the worst periods of my trading life. I had just blown another account. Not my first, not my last at that time, but that one hurt differently. Because I was sure I had figured it out. I had a system, I had confidence, I had proof. And yet, within weeks, the account was gone. I remember sitting in front of my screen, staring at the empty balance, feeling that familiar mix of anger and shame. Angry at the market, ashamed of myself, and deeply confused about how something that felt so right could end so wrong. That was when he said something I still hear in my head today. The market didn't do this to you. You did. Those words cut deep. Not because they were harsh, but because they were true. I wasn't unlucky. I wasn't manipulated. I wasn't a victim of some invisible force. I was simply undisciplined, emotionally reactive, and addicted to being right. At the time, I wanted him to teach me how to win. Instead, he kept pointing at my behavior, my impatience, my need for validation, my fear of missing out, my inability to sit with boredom. He once told me, most traders don't fail because they don't know what to do. They fail because they can't accept how boring success actually feels. I ignored that advice for years. And here's the painful part. He never raised his voice, never criticized me directly. He just asked questions that forced me to look at myself. Questions like, why did you take that trade? Or what were you feeling right before you clicked the button? I hated those questions because they had nothing to do with charts. I wanted market answers. He gave me human ones. When he passed away, I went back and read old messages, conversations I barely remembered, notes I thought were too abstract back then. And suddenly everything made sense, not intellectually, emotionally. I realized something that night. He wasn't teaching me how to trade. He was teaching me how to survive myself. And that realization hurt more than any losing trade I had ever taken. Because once you understand that, you can no longer blame the market. You can no longer hide behind indicators, strategies, or gurus. You're forced to confront the uncomfortable truth that trading is not a technical problem. It's a psychological one. And the mistake I made for years, the mistake I see most retail traders still making today, was thinking that progress comes from adding more tools, more strategies, more information. When in reality, progress came the moment I started removing things. Removing ego,
removing expectations, removing the fantasy that trading was supposed to make me feel powerful. That was the lesson my mentor never said out loud, and the lesson I only fully understood after he was gone.
For a long time after that realization, I didn't trade much. Not because I was afraid of losing money again, but because something inside me had shifted. The excitement I once felt when opening a position was gone. The rush, the adrenaline, the illusion of control, it all felt strangely childish now. That was when I started to see the real mistake I had been making all those years. I wasn't trading to make money. I was trading to feel something. I wanted certainty in a world that offered none. I wanted validation in numbers. I wanted the market to tell me I was smart, capable, different from the rest. Every winning trade felt like proof. Every losing trade felt like rejection. And the market, as it always does, used that against me. Looking back, I can see how predictable my behavior was. After a win, I felt invincible. I increased size. I relaxed rules. I told myself I had momentum. After a loss, I rushed to recover. I wanted the pain gone as fast as possible. I wasn't managing risk. I was managing emotions. My mentor saw this long before I did. He once told me, if you need the market to make you feel okay, it will eventually destroy you. At the time, I brushed it off as philosophical nonsense. I wanted tactics, not life advice. But what he understood, and what I didn't, was that the market has a way of exposing whatever you bring into it. If you bring fear, it will amplify it. If you bring greed, it will reward it just enough to trap you. If you bring ego, it will wait patiently until you're overconfident, and then take everything back. The pain wasn't the losses themselves. The pain was realizing that I had been repeating the same emotional patterns over and over, expecting a different result. That was the real failure. The turning point didn't come from a new system or a breakthrough strategy. It came from a quiet decision I made one morning before the market opened. I decided that my self-worth would no longer be tied to my P&L. That sounds simple. It's not. It meant accepting boredom. It meant sitting on my hands when nothing aligned. It meant taking small, almost insignificant trades and being okay with them. It meant letting go of the fantasy that trading was supposed to feel exciting. Slowly, something changed. I started journaling not just trades, but thoughts. Why I wanted to enter, what I was afraid of, what I expected to happen. Over time, patterns emerged, not in the market, but in me. I noticed that my worst trades came when I felt rushed, or lonely, or pressured to prove something. My best trades came when I felt neutral, almost indifferent. That's when my mentor's silence finally made sense. He wasn't withholding information. He was waiting for me to mature enough to hear it. The market doesn't reward intensity. It rewards clarity. It doesn't care how badly you want it. It only responds to discipline applied consistently over time. That realization didn't make me rich overnight. It made me stable, and stability in trading is everything. Because once you stop needing the market to validate you, you stop forcing trades. Once you stop forcing trades, you stop bleeding. And once you stop bleeding, you finally give probability the time it needs to work. I wish I could tell him that I finally understood, that I now see trading the way he did, not as a battlefield to conquer, but as a mirror that reflects who you are under pressure. His passing left a silence that no strategy could fill. But in that silence, the lesson became permanent. Trading didn't change me because I learned more about markets. It changed me because I learned more about myself. And that was the revelation I didn't know I needed. What took me the longest to understand was that my mentor wasn't teaching me how to trade the market. He was teaching me how the market trades people. Once that idea really sank in, everything I had experienced suddenly lined up with brutal clarity. The blown accounts, the emotional swings, the periods of overconfidence followed by deep self-doubt. None of it was random. None of it was bad luck. It was structure.
Not just market structure on a chart, but psychological structure inside the trader. Retail traders, like I once was, tend to believe the market is chaotic, unpredictable, almost alive. In reality, it's disturbingly consistent. Price moves where liquidity exists. Volatility expands where emotions concentrate. And most importantly, pain clusters in very specific places. That's not an accident. When enough people believe the same thing, act the same way, and manage risk the same way, the outcome becomes mathematically obvious. The market doesn't need to know who you are. It only needs to know where you'll panic. This is where my mentor's quiet warnings came back to me. He used to say, "The market never hunts you, it hunts behavior." At the time, I thought he was talking about stop losses. Years later, I realized he was talking about something much deeper. Retail traders don't lose because they're wrong too often. They lose because when they're wrong, they react the same way every time. They hesitate to cut. They add to losers. They get emotional when size increases. They feel relief instead of discipline when a trade works. Smart money doesn't need to predict price. It only needs to predict reaction. That's why the same traps keep working decade after decade. Different instruments, different technologies, same human wiring. I saw this clearly when I revisited one of my own worst periods, a time when my strategy actually had a positive expectancy on paper. The system wasn't broken, my execution was. Every large drawdown I experienced came after a period of confidence. Not confidence grounded in data, but confidence fueled by recent wins. That subtle shift changed how I behaved. I sized up without realizing it. I became less selective. I started anticipating instead of waiting, and the market responded instantly. Not because it was watching me, but because it was designed to exploit exactly that behavior. My mentor once described the market as a pressure chamber. It doesn't force you to break. It simply applies pressure until your weakest habit surfaces. For some traders, that's fear. For others, greed. For me, it was impatience disguised as confidence. Understanding this changed how I evaluated everything. I stopped asking whether a setup was good or bad in isolation. I started asking whether I was in the right state to execute it. I stopped measuring success by daily profit and started measuring it by behavioral consistency. The biggest insight was this: edge doesn't come from being smarter than the market. It comes from being more predictable to yourself than the market expects you to be. Smart money wins not because it knows more indicators, but because it operates from a position of emotional neutrality. It doesn't need to be right today. It doesn't need to prove anything this week. It lets probability breathe. That's something retail traders rarely allow. We want resolution. We want closure. We want the market to tell us whether we're doing well or failing. But the market doesn't care about our timelines. It only respects patience applied consistently. When I finally understood that, trading stopped feeling like a battle. It started feeling like alignment. Alignment between rules, behavior, and risk. And that's when I realized the final lesson my mentor had been trying to teach me all along. The market isn't hard because it's complex. It's hard because it's honest. It shows you exactly who you are under pressure. And most people don't like what they see.
After everything I had been through, after all the losses, the emotional cycles, and the slow unraveling of my own illusions, the question wasn't whether I could trade better. The real question was whether I could live with myself while trading. That's when I started changing things. Not dramatically, not overnight, but quietly, almost unnoticeably. I stopped trading when I felt the urge to trade. That alone eliminated more bad decisions than any indicator ever had. I learned to recognize that subtle restlessness in my body, the need to click, the impatience disguised as confidence. Whenever it showed up, I stepped away. Not because the setup was wrong, but because I was. I reduced my size to the point where losing no longer hurt my identity. When risk becomes emotionally neutral, clarity returns. I could finally follow rules instead of negotiating with them. I could accept losses without needing revenge. That was the moment discipline stopped feeling forced and started feeling natural. I also made peace with boredom. Most traders never do. They confuse boredom with stagnation. In reality, boredom is often the sign that you're finally doing things right. When you're no longer chasing excitement, the market loses its power over you. And when it loses that power, you regain control. The final change was how I defined success. Success was no longer a green day or a big win. Success became ending the day knowing I didn't betray my own rules, knowing I didn't trade to soothe anxiety or inflate ego, knowing I showed up the same way regardless of what the market offered. That consistency slowly compounded, not just in my account, but in my mindset. Years later, when I think about my mentor, I no longer feel regret. I feel gratitude, because the lesson he left me wasn't about entries or exits. It was about responsibility, about understanding that no one is coming to save you in this business. Not a mentor, not a system, not a signal service. The market is the final teacher, and its lessons are permanent. If you're watching this and you're struggling, blowing accounts, questioning whether you're cut out for this, let me tell you something my mentor never said directly, but showed me through example. You don't need to become someone else to succeed in trading. You need to become more honest with who you already are. Once you stop fighting that truth, trading stops being a source of suffering and becomes a craft, a long one, a quiet one, a deeply personal one. And if there's one thing I hope you take away from this story, it's this: mastering the market begins with mastering yourself. That lesson cost my mentor his life's work to pass on. It cost me years of pain to understand. I hope it cost you less.